CRA new rule, 1,488 automatic payment starting February 2026. There's something happening right now that most Canadians aren't talking about yet. Starting February 2026, the Canada Revenue Agency is implementing a new automatic payment structure that could put $1,488 directly into the accounts of eligible Canadians. But here's what's concerning. Most people don't know if they qualify. Many don't know how this connects to recent changes in how the CRA processes benefit payments. And some may not receive it at all, even if they should. My name is Joseph, and I've spent over 2 decades analyzing Canadian pension policy, retirement benefits, and government tax structures. And what I'm seeing right now is a quiet shift in how Ottawa is restructuring automatic payment systems, a shift that could mean significant money for some households and confusion or missed opportunities for others. This isn't about speculation. This is about understanding what the government is actually doing, who benefits, who doesn't, and what you need to do to make sure you're not left behind. So let's break this down, step by step, because this matters for your retirement, your income, and your financial security in 2026 and beyond. To understand what's happening in February 2026, we need to look at what's been building over the last several months. The Canada Revenue Agency has been under pressure. Pressure from inflation, pressure from an aging population, pressure from provinces demanding better coordination on senior benefits, and pressure from advocacy groups who've been pointing out gaps in how benefits reach the people who actually need them. Over the past year, policy analysts and pension experts have noted something unusual. The CRA has been conducting what they're calling benefit delivery optimization reviews. That's government language for, we're changing how money gets to Canadians. These reviews have focused on several key areas: automatic enrollment, payment timing, eligibility verification, and something that's flown under the radar for most people, retroactive benefit reconciliation. Now, if you follow Canadian tax policy closely, you'll know that the CRA already administers automatic payments, the GST/HST credit, the Canada Child Benefit, the Climate Action Incentive, and for seniors, the Guaranteed Income Supplement. But what's changing in February 2026 is different. According to internal policy documents and statements made by CRA officials at recent federal-provincial meetings, the agency is consolidating how it delivers what they're calling reconciled benefit adjustments. In plain language, that means if you were underpaid, overpaid, or missed payments due to administrative errors or eligibility updates, the CRA is now automatically calculating what you're owed and paying it out in a lump sum. The $1,488 figure, that's not arbitrary. It represents the average reconciliation amount identified across a subset of benefit programs for the 2024 and 2025 tax years, particularly for low to moderate income seniors and retirees who may have been underpaid on GIS, OAS top-ups, or provincial benefit coordination. But here's the catch. Not everyone gets this automatically, and that's where the confusion begins. Let's be very clear about what this new CRA rule actually is. Starting February 2026, the Canada Revenue Agency will begin issuing automatic reconciliation payments to Canadians who meet specific criteria. These payments are designed to correct benefit shortfalls that occurred due to delayed income reporting, reassessed tax returns, or updated eligibility for federal and provincial programs. The payment amounts will vary. Some Canadians may receive a few $100s, others may receive over $2,000. The $1,488 figure is the projected median for seniors and retirees in the reconciliation pool. Here's how it works. When you file your tax return, the CRA uses that information to determine your eligibility for various benefits. CPP doesn't require a tax return, but OAS and GIS do. So does the GST credit. So do provincial top-ups in places like Ontario, British Columbia, and Quebec. Now, let's say your income changed in 2024. Maybe you retired mid-year, Maybe your RRSP withdrawals were lower than expected. Maybe you stopped receiving employment income. All of these changes affect your benefit eligibility. Normally, the CRA recalculates your benefits in July, after your tax return is processed. But there's often a lag, sometimes months, sometimes longer. And during that lag, you may have been receiving less than you were actually entitled to. Under the old system, you'd have to notice the discrepancy, contact the CRA, and request a review. Most people didn't do that, either because they didn't know or because navigating CRA phone lines felt impossible. Under the new rule, the CRA is automating that process. If their systems detect that you were underpaid based on your updated income and benefit eligibility, they will calculate the difference and issue a one-time automatic payment in February 2026. This applies primarily to guaranteed income supplement recipients who had income changes, OAS recipients who became eligible for top-ups retroactively, low-income seniors who qualified for provincial benefits but weren't enrolled, Canadians whose GST credit was undercalculated due to reassessed returns. The February timing is intentional. It aligns with the CRA's new quarterly benefit review cycle and gives them time to process 2024 tax returns before issuing payments. So who actually qualifies for this $1,588 automatic payment? Let's be specific. Seniors age 65 and older receiving GIS or OAS. If your income dropped in 2024 or 2025, or if you became newly eligible for additional benefits, you may be owed back payments. This is especially common for people who retired mid-year or whose investment income decreased. Low-income retirees whose provincial benefits weren't coordinated properly. In provinces like Ontario, BC, and Alberta, there are provincial top-ups tied to federal benefits. If the CRA and provincial systems didn't sync correctly, you may have missed payments. Canadians who had their tax returns reassessed. If the CRA corrected your income after your initial return was filed, your benefit entitlements may have changed. The reconciliation payment covers the gap. Recent widows and widowers. When a spouse passes away, your household income changes. This often triggers eligibility for higher GIS or survivor benefits. If there was a delay in processing, the CRA will pay the difference retroactively. Anyone who qualified for the GST credit but received less than they should have. This is more common than people realize, particularly for those with fluctuating incomes or who moved provinces. Now, here's what's important. You don't need to apply for this. If you're eligible, the CRA will calculate it automatically and deposit it into the same account where you receive your other benefits. But, and this is critical, you do need to have filed your tax return. If you haven't filed for 2024, you won't be in the system. If your direct deposit information isn't updated, you'll receive a check, which can delay things by weeks. Let's talk about what $1,488 actually means for a Canadian household. For a senior living on a fixed income, $1,488 is not trivial. That's nearly 2 months of grocery bills. It's a property tax payment. It's the difference between making it through winter with the heat on or struggling to choose between warmth and medication. But let's look at this more carefully, because the financial impact depends on your situation. Example 1. A single senior on GIS. Let's say you're 68 years old, living alone, and receiving the maximum GIS. Your income in 2023 was $18,000. In 2024, you retired fully and your income dropped to $12,000. That change makes you eligible for a higher GIS rate retroactively. The CRA recalculates your entitlement. You were underpaid by approximately $124 per month for 12 months. That's $1,488. In February 2026, you receive that full amount in one payment. Example 2. A couple where one spouse passed away. You and your spouse were receiving OAS and splitting CPP. In mid-2024, your spouse passed away. You became eligible for survivor benefits and a higher GIS rate as a single person. But the paperwork took months. You were underpaid for 8 months at roughly $186 per month. The CRA issues you $1,288 to cover that gap. Example 3. A retiree whose tax return was reassessed. You filed your 2024 return in April 2025. In August, the CRA reassessed it after correcting a reporting error from your financial institution. Your taxable income dropped by $3,000. That made you eligible for a higher GST credit and a provincial senior benefit you didn't know existed. The combined shortfall over 12 months, $1,488. These are real scenarios, and for many Canadians, this money isn't a bonus. It's income they were already entitled to, but didn't receive on time. Now, some people will receive more than $1,488. Others will receive less. The amount depends entirely on how much you were underpaid and for how long. But here's the larger point. This automatic payment is a one-time correction. It doesn't increase your ongoing monthly benefits unless your circumstances have permanently changed. If your income remains low, your future GIS and OAS will be higher. But the $1,288 itself is a catch-up, not a permanent raise. So why is the government doing this now? There are several reasons, and understanding them helps you see where policy is heading. First, political pressure. Advocacy groups like the National Pensioners Federation and the Canadian Association of Retired Persons have been vocal about benefit delivery failures. Seniors were being underpaid, and the system required them to catch the errors themselves. That's not acceptable, and Ottawa knows it. Second, administrative efficiency. The CRA has been investing heavily in automation. Manually processing benefit appeals and recalculations is expensive and slow. Automating reconciliation saves money and reduces backlogs. Third, demographic reality. Canada's population is aging rapidly. By 2030, 1 in 4 Canadians will be over 65. The current benefit system wasn't designed for that scale. The government is trying to future-proof delivery mechanisms before the system becomes unmanageable. Fourth, inflation and cost of living. Seniors are being crushed by rising costs. Grocery prices, heating, rent, property taxes, everything is more expensive. The government knows that underpaying benefits during an affordability crisis is politically dangerous. Automatic reconciliation is a way to quietly fix the problem without admitting there was a systemic failure. But there's also a fiscal angle. By consolidating payments and automating reviews, the CRA can better control costs. They know exactly how much they're paying out, to whom, and why. That gives them more predictable budget planning, which matters when you're managing billions in annual benefit spending. Is this a good thing? In principle, yes. Seniors should receive what they're entitled to without having to fight for it. But it also reflects a government trying to manage an increasingly complex and expensive benefit system under fiscal strain. Economists and pension experts have had mixed reactions to this policy shift. Dr. Michael Wolfson, a former assistant chief statistician at Statistics Canada and a leading voice on retirement income policy, has noted that while automatic reconciliation is a step forward, it doesn't address the underlying issue: benefit systems that are too complicated for ordinary Canadians to navigate. If people don't understand what they're entitled to in the first place, an automatic payment doesn't solve the problem, Wolfson said in a recent policy briefing. It just corrects a symptom. Advocacy groups have been more supportive but cautious. The National Pensioners Federation issued a statement welcoming the change, but emphasizing that seniors still need clearer communication about their benefits. A $1,388 payment is meaningless if people don't know why they received it or what it's for, the statement read. Provincial governments have also weighed in. Ontario and British Columbia, which both administer their own senior benefit top-ups, have indicated they're coordinating with the CRA to ensure provincial payments are included in the reconciliation process. But some provinces, particularly in Atlantic Canada, have expressed concern that their systems aren't integrated enough to participate fully. There's also been quiet criticism from fiscal conservatives who argue that automatic payments create risk. What if the CRA miscalculates and overpays? Who's responsible for recovering those funds? The agency has indicated that overpayments will be handled through future benefit reductions, which could create hardship for seniors on fixed incomes. The public response has been muted so far, largely because most Canadians don't know this is happening. There's been no major announcement, no press release, just quiet policy implementation, and that's concerning because it means the people who need this money most may not be prepared to receive it or understand what it's for. If you want to make sure you receive this payment and receive it correctly, here's what you need to do. Step 1. File your 2024 tax return on time. This cannot be overstated. If you don't file, you're not in the system. Even if you have no income to report, file anyway. Seniors often skip filing because they assume they don't need to. That's a mistake. Your tax return is how the CRA calculates your GIS, OAS top-ups, GST credit, and provincial benefits. Deadline: April 30th, 2025. Don't wait. Step 2. Update your direct deposit information. If the CRA doesn't have your correct banking information, your payment will be mailed as a check. That delays things by weeks, sometimes months. Log into your CRA My Account online and verify your direct deposit details. If you don't have online access, call the CRA and update it over the phone. Step 3. Review your benefit statements. If you receive GIS or OAS, you get benefit statements throughout the year. Look at them. Compare what you're receiving to what you think you should be receiving. If something seems off, contact the CRA now. Don't wait for February 2026. Step 4. Watch for correspondence from the CRA. If you're eligible for a reconciliation payment, the CRA should send a notice explaining the amount and why you're receiving it. Don't ignore CRA mail. Open it. Read it. If you don't understand it, call them or ask someone you trust to help you. Step 5. Be cautious of scams. Anytime the government announces new payments, scammers appear. If you receive a call, email, or text claiming to be from the CRA and asking for banking information or personal details, it's likely a scam. The CRA will never ask for this information unsolicited. Hang up. Delete the email. Report it. Step 6. Plan for the money wisely. If you receive $1,188 in February 2026, treat it as what it is: income you were already owed. Use it to pay down debt, build an emergency fund, or cover essential expenses. Don't assume you'll get this amount every year. It's a one-time correction. So what happens after February 2026? This automatic reconciliation system is likely just the beginning. The CRA has indicated that it plans to expand automated benefit delivery across all programs. That could mean fewer delays, fewer errors, and more money getting to the people who need it. But it also means more oversight, more data integration, and more reliance on technology. If the systems fail, or if the algorithms miscalculate, the consequences could be significant. There's also the question of what comes next for senior benefits more broadly. Canada's retirement income system is under strain. CPP enhancements are phasing in, but they won't fully mature for decades. OAS is indexed to inflation, but inflation has been outpacing increases. GIS is means-tested, which creates clawback traps for seniors who try to work part-time or draw down savings. Experts are calling for a comprehensive review of Canada's retirement income system. Some are advocating for a guaranteed basic income for seniors. Others want higher CPP and OAS rates across the board. Others still argue for better integration between federal and provincial programs. What's clear is this: the status quo isn't working. Seniors are being left behind. And while a $1,488 automatic payment is helpful, it's not a solution to the larger structural problems facing Canadian retirees. The federal government has signaled that retirement income policy will be a priority in the next budget cycle. Whether that leads to meaningful reform or just more patchwork adjustments remains to be seen. In the meantime, Canadians need to stay informed, stay vigilant, and make sure they're not leaving money on the table. The CRA's new automatic payment system starting February 2026 represents a significant shift in how benefits are delivered to Canadian seniors and retirees. For some, it will mean much-needed money arriving when it's needed most. For others, it will raise questions about why they weren't receiving the correct amount in the first place. But one thing is certain: if you're not paying attention, if you're not filing your taxes, if you're not updating your information with the CRA, you could miss out. This is your retirement income. This is your financial security. And in a system this complex, knowledge is the only real protection you have. My name is Joseph. I'll continue tracking these developments and breaking down what they mean for Canadian retirees, seniors, and anyone planning for the future. If you found this analysis helpful, subscribe to this channel, share this video with anyone you know who might be affected, and leave a comment below. I want to hear your concerns, your questions, and your experiences navigating Canada's benefit system. Stay informed, stay prepared, and don't let complexity keep you from what you've earned. Thank you for watching.